Welcome back. A very, very interesting market at hand. And to discuss it, to talk about the way forward, we have with us now Mithun Aswath of Kivah Advisors. Mithun, thanks very much for joining in. So this big bank trade, this is finally showing up. The question is, is it the real deal? You know, we've had several false starts in the last couple of months. You know, you have banks going up 1 or 2 days and then it kind of fizzles out. But what's your sense? I think the entire market is waiting for the banking sector to take off. Is this it?
Yeah, good afternoon, Surabhi. I think, there's been, post the election results, you've seen, FIIs also come back quite strongly. I think over the last 1 week, over $1.5 billion have come into the market. And, this is the pocket where, there's been underperformance, especially in the private sector banks, which we've spoken about. And I think, the rotation is going into pockets where their valuation is comfortable, as well as there's enough liquidity for investors to take positions. So I think this could continue, because if we need the market to move up even further from here, at least at the index level, you need the financials to perform.
Okay, you need the financials to perform, and that's really what's happening right now. But on the other hand, Aswath, you have the Midcap index, which is coming in for some profit taking, and the index is down about 400 points. You think it's getting a bit frothy at the top there? And how does one approach it?
Yeah, afternoon, Sonia. I think, you've seen, the Midcaps really outperform over the last couple of weeks. And, I think it's just maybe a bout of some profit booking, because I think there's continued interest there at lower levels in terms of, select stocks. So I would not kind of give it a broad brush saying, mid-caps, are done with. I think you have to be maybe slightly more selective, but opportunities will continue to be there. So I think the growth rates in those companies are higher than the mainline indices. But obviously, one needs to take into account valuations as well. So.
Okay, all right. Hi, Mithun. Good afternoon and good to see you in. Well, normally you give us one stock, and I believe the one that this time around you're looking at is Nesco. Give us the rationale. Why do you find the stock attractive even at current levels?
Yeah, afternoon, Nigel. Nesco is basically a real estate company which owns assets. They own the Bombay Exhibition Center as well as an IT park in Bombay. The good part of this company has been that they have been expanding using internal accruals. They're sitting with close to 1,500 crores of cash and investments, which they're looking to embark upon a 4.6 million square feet expansion in the existing space. So they are going to put up an IT park, hotel, and also expand the Bombay Exhibition Center. So we actually see maybe a tripling of revenues over the next 5 years, because they currently have about 1.7 million square feet under which is operational, which could there's 4.6 of further space being added. So this is something that is a long-term play. It's going to take maybe 3 to 5 years to play out. But at the current market, trying to find value is something that we've been hunting for. And at about 18 times trailing earnings, this doesn't look too bad.
Okay, that's an interesting one. The hunt for value, and Nesco is at least making the cut. And that's really, I guess you're summing up most fund managers' pain, right, Mithun? Because when you have traditional defense stocks trading at 40 times and capital goods companies now trading at 90 times, 100 times, this whole value searches is difficult. So give us some more ideas, some more pockets where you think that it's still reasonable to get in now.
I think I was just hearing about Nigel talking about Fertilizer as well. And we've spoken about this earlier. One of the companies that we spoke about earlier, as well as Mangalore Chemicals and Fertilizer, where valuations are very comfortable. There's an impending merger with Paradeep Phosphates, and the merger ratio is in favor of Mangalore Chemicals shareholders. There's almost a 15 to 20% discount at the current prices. Here as well, I think valuations are on your side. And potentially, as a fertilizer policy is also announced, we do think this presents an opportunity for investors.
Sure. Okay, that's on the fertilizer space, coming back after a while. But ahead of the budget, I think there are a lot of these spaces that are coming back into action. But, I wanted your thoughts on the auto sector, because we've had some solid commentary come in from many managements, right? Whether you look at M&M, whether you look at Tata Motors, they've actually come out with a long-term vision of a 15% EBIT margin for Jaguar Land Rover. So they are that confident about the business. Do you think more money can be put to work here?
Yeah, hi Sonia. I think we've held on to Tata Motors for a long time, and we continue to stay put there. I think the local business is already debt free, and they are embarking upon Tata Motors JLR also becoming debt free next year. Also, there was some news today where there's the JLR platform is going to be used for EV vehicles in China with their JV partner Chevy. So I think there are good times in Tata Motors. There's also an impending demerger of the commercial vehicle business as well. So I think Tata Motors, obviously, it has moved up quite handsomely over the last year or so. But I think there's still, more for investors with a 2 to 3 year perspective, with the plans that Tata Motors, both on the JLR and the local front, have. I think you should stay put there.
Okay, all right. What about a couple of other ideas? Mithun, in the past, you've discussed quite a few. I think we discussed Bharat Forge, Everready Industries as well in the past. What else? That was an interesting point you made on the merger ratio between Mangalore Chemicals as well as Paradeep, that, there is an opportunity of close to 22%, I think 22, 23% as of now. Anything else you find interesting?
Yeah, I think, Nigel, we spoke about Vedanta some time back, and it's obviously rallied very handsomely since those 270, 280 levels. But even now, at around 450 levels, interesting fact is now that Hindustan Zinc has rallied quite sharply. And, Vedanta holds about 65% there. And the 65% stake in Hindustan Zinc is more valuable than the entire Vedanta right now in terms of market cap. So, there are some anomalies in the market. I think Vedanta is also talking about, unlocking their, iron ore, their steel business in the next couple of quarters. That, again, should help reduce the debt. So I think that counter still looks quite interesting and could still provide upside for investors.
Mithun, since you made it so interesting, I think it'll be a good idea for us to get the promoter on the channel. Let's hope in this week itself, we'll get Mr. Anil Agarwal to answer some of those queries. But undoubtedly, the stock has been a big play on this entire metal melt-up that we've seen. Good talking to you, Mithun, as always. Thanks a lot for joining in and filling us in